So Dogecoin has been the center of a lot of investment interest as of late, and I know that a lot of viewers on this channel want to hear a bit more about this fairly mysterious crypto project, which has been rapidly increasing in market value over the last few weeks. And so in this video I'm going to be sharing my own take on this crypto. The first thing to note is that Dogecoin was initially formed as a joke, and it was never intended to be a fully functioning and viable cryptocurrency when it was invented. But actually between 2014 and 2017, Dogecoin gained a fairly sizable following of people who liked the laid back and fun idea. And then one day all of that changed when a software developer named Billy Marcus, who worked for IBM in Oregon at the time, was having trouble marketing his own cryptocurrency and was gaining very little traction. And so eventually Billy came across Dogecoin and figured out that if he could reach out to the initial developer, he could build the technological infrastructure and make Dogecoin a fully functioning cryptocurrency. And that it could work out well for both of them, because the initial developer Jackson Palmer didn't have any intentions to further the technological value of the currency. And on the other hand, Billy Marcus, the software developer, had the technological capability but lacked a brand with an existing following, which would become the initial Dogecoin user base. Today Dogecoin is far more functional and utilizes a proof-of-work system using similar technology to Litecoin. Dogecoin is also an inflationary currency, meaning that there is no fixed supply or limit to how many units could be in circulation at any point, which is something that anybody considering purchasing this crypto should bear in mind. Now, although there are cryptocurrencies out there which have a lot more utility than Dogecoin and are from a technological standpoint further ahead, there is a very interesting theory circulating the internet regarding Dogecoin, and I for one find it to be a potentially plausible theory. A lot of people are saying that the very fact that Dogecoin wasn't designed to be a commercial venture but more of a fun alternative to Bitcoin, effectively a joke at first, is the thing which is driving demand for Dogecoin. Over the last decade since the financial crisis, there has been a rapid change in the mindset of people all over the world in respect to centralized finance. A lot of people no longer trust banks or the finance industry, and there is something very appealing to a lot of frustrated people about a currency which was designed to be very laid back and was created by and large by two average guys, and this is something that people can relate to. And so I think that paradoxically, even though most people who own Dogecoin know that there are better currencies out there in terms of technological value, it's the idea and the way that Dogecoin came to be in its present form which is appealing. And one thing that I've learned from years of investing in crypto and being a long-term observer of business is that consumer habits and consumer powers are very different to just 5, 10, or even 15 years ago. Public opinion conveyed through social media is what makes or breaks a brand in 2021. It used to be the case that a few good or bad reviews didn't make a difference to a brand's reputation, because the average person had no way other than word of mouth to share their experiences in dealing with a brand or sharing information. But of course today social media allows everybody the privilege of a megaphone and the ability to join forces, and so the tables have really turned in that market trends are created, maintained and diminished by the desires of average people. And that's why, although I'm not a Dogecoin investor, which I'll talk more about in a moment, I will never bet against this crypto either. If we take a moment to think about what a currency actually is, once we strip away the technological value and the complicated software infrastructure, it's simply a medium which allows for exchange between a group of people, and so the currency can be anything which that group of people are willing to accept and trade with. And so evidently by the fact that Dogecoin has been booming in price lately, a lot of people want to use Dogecoin, and I've watched firsthand the power of social influencing through social media, and the effect that it can have on the adoption of a cryptocurrency, and that's why I won't be surprised if the price of Dogecoin were to increase substantially. And moving on, the reason as to why I personally don't own any Dogecoin is because my strategy focuses on crypto projects which offer a service and operate more like businesses than cryptocurrencies. And the reason is because I believe that I can far more predictably identify long-term value in a crypto project which offers a service, because I can evaluate the quality of the service and the size of the market, and I can look at previous adoption and extrapolate based on that data. And personally I think that this strategy is best for me, but that's just my opinion, and other investors will have their own styles, which is of course fine. The other thing is, in the same way that Dogecoin has gained substantial following over the last few weeks, which is testament to the sheer power of social media, we all know that consumer trends can often fall away just as fast as they pop up. I mean, we just have to remember fidget spinners, or the ice bucket challenge, or the cinnamon challenge to illustrate how quickly consumer preferences and the hype around certain things, which may all of a sudden be very popular, can easily change. And so while I don't know what's going to happen with the price and popularity of Dogecoin, I for one think that from an investment perspective, it's simply too unpredictable for my own tolerance. I mean, I really wouldn't be surprised if Dogecoin were to triple in price from here or lose half of its market value. And I think that it's just one of those high-risk, high-reward cryptos, where if an investor is willing to take a gamble, they could potentially make a lot, but they may also lose a lot as well. And by the way, even though it's not my strategy, I don't think that a speculative bet is always a bad thing. There are certain times when investing in a way which on the surface looks like gambling can be really profitable. The case and example for this type of scenario is a practice of professional gambling. The way that every professional gambler makes money sustainably is by making bets which are statistically in their favor over a long period of time. If I bet on horse races every day where the odds are very slightly in my favor on average, I'm going to make money over time. And the trick here is to be able to identify the opportunities where the market offers highly favorable odds which statistically are in the favor of the investor. I mean, this might occur when the price falls by 20 or 30% in a single day, and the likelihood of a small bounce back becomes very high, so that an investor could place a highly favorable bet which, even though it may look like gambling, I would consider to be a sound investment. Because if we look at what investing actually is, it's looking for statistically favorable opportunities to deploy capital, where the chances of getting more money back than was initially invested is favorable. And so although I have no immediate plans to invest into Dogecoin, that's not to say that I'm ruling out the possibility of ever investing. The wise investor is a rational person who adapts their approach to their surrounding and the circumstances of the market. Anyway, hopefully I've gone at least some way in furthering your understanding of the factors surrounding Dogecoin and what I think of this cryptocurrency. And as a final point, I'd like to make a short address to any of the short sellers which may be watching this video. While I never tell anybody how to invest their money, I will share my thoughts, and I want to stress that even though the market value of Dogecoin isn't reflected in the fundamentals, the world has changed such that social trends can go a lot further and last a lot longer than could have been possible even 10 years ago. And so unless you feel that you can accurately predict the extent of the growth and popularity of Dogecoin, or any other crypto for that matter, and you know how long the trend will last, or that it won't be a permanent trend, or at least fixed for some years to come, then I personally would be very careful shorting any asset as unpredictable as Dogecoin, and I probably would never short at all. I've seen too many investors fall into the shorting trap, where all of a sudden a rise of 100 or 200% in the market value, a gain which isn't unfamiliar to Dogecoin, has wiped them out and caused losses which they'll probably never be able to make up for. And on that note, I'd like to end the video, but before that, if you enjoyed this video, I'd like to make an appeal to you to subscribe to our channel. I'd really appreciate it, and you'd be helping us to grow and enable me to spend more time on the channel. Thanks for watching.